2024, ICT took a trade that absolutely blew my mind. He nailed a New York close reversal, clean sweep, perfect timing, and a sniper exit, but he never explained how. No rules, no breakdown. He just wanted us to sit in awe, coming back for more, waiting for whatever breadcrumbs that he might drop next. So what did I do? I stopped waiting and I reverse engineered it myself. What I found out turned into be one of the highest probability models that I've ever traded. It's a time-based setup with over a 63% win rate, back tested for over a year, and today I'm going to be giving you a full breakdown. This ICT model is predictable, reliable, and if you follow the rules that I'm going to be sharing with you, it will be like a money printing machine. Here's exactly and specifically how it works. Between 2:30 and 3:15 p.m., you want to look for price spooling or a clean move towards either the current high or low of day. We are looking to target our entry during the 3 p.m. macro. It's in this window where reversals become highly probable. Once the high or low of the day is taken, we wait for an inversion, a structure break, back in the opposite direction. When that candle closes over the inversion, that's our entry. The only time that I actually don't take this is if there's a higher time frame market maker buy or sell model in play. Make sure to also look left even beyond the previous days to make sure that there isn't any lingering lows or highs that price could actually be reaching for, causing your stop to be hit. We are going long after a sweep of the low of day and an inversion higher, or a short after a sweep of the high of day and an inversion lower. Your stop just goes outside the high or low of day when you're placing it. For targets, focus on liquidity pools, imbalances, or just a clean one-to-one risk to reward, which is simple and effective. Also, if you get stopped out, but the 3 p.m. structure is still in play, you can actually take a second entry on the next valid inversion before 3:15 p.m. This model works because of timing, not just patterns. I tracked every trade for an entire year. It came out with a 33% win rate, $17,450 in net profit. It had a 3.1 profit factor. My average winner was $678 versus $377 on average for a loss. The equity curve looks like a staircase, steadily climbing higher and higher with healthy pullbacks and consistent recovery. Let me show you a couple of the notable trades. Right here was one of the winners, and I want to show you some of the details. Right off the bat, when we are looking for the 3 p.m. reversal, we have to look left. Right here, 226, 7, 8, and then we make our low right at 242. We want to make sure we look left, make sure we swept liquidity of some kind. Here we have some liquidity that is sitting here that could actually be a potential issue. I ended up taking the trade anyway after I saw this aggressive price action moving higher, and I took the entry once we had the inversion. After we have the inversion, we'd go long, and then I targeted the obvious swing high that I liked, and it was this one right here. We ended up going much higher, but ended up selling right there. You can see how much higher we went towards the end of the day. But that's a perfect example of where to place your stop loss. Could have targeted these equal highs that were sitting right here. I ended up targeting this high right there. Here's an example of a loss that was for $660, but it also gave another entry that I did not take that turned into a winner. First off, we look left, there's nothing left. So we know that it could go lower if it wants to. There's a swing low that we swept way over here. And as soon as we made this low, we had some aggressive price action right here that I ended up taking the long when we had the inversion right here. Went long, and we immediately failed. We made another low. So again, what you do is you just wait for the next inversion. Well, the next inversion would be right here. We see it go long right here. And from this point, we don't go back to the low the rest of the day. This entry would have been at 18,645, and you could have targeted this high right here at 698. That would have been roughly a 50 handle move by taking that trade after the initial loss. Here's another win for $550. You can see that we make the low of day at 306, and we're waiting for the inversion. There was an inversion right here, and we went long on at 314. When it closed 315, there's our entry. And you can see that we don't go lower. Let me move this to the correct location where we go long. We don't go lower at all. We don't come anywhere close to where our stop was. It would have been 24 handles with a 53 handle win. Again, make sure to always look left. Make sure that there's a swing low that was tagged right there. And so we know that there's a probability of this actually playing out for us. Here's another example of a 600-point win. First thing you do, look left, make sure we have swept lows. Great, beautiful. Then now we're waiting for the low to hit. We make a new low at 239. No inversion, as you can see right here. There was an inversion, but we don't go above it. We go back lower, and then there's this tiny inversion fair value gap. As soon as we close above it, we take our long, set our stop at the low of day. We went higher, as you can see, but I ended up targeting this level right here because if you look left, there was this swing low that was just sitting kind of out by itself, and I was concerned that we just might wick up to there and then reverse, and I didn't want to lose the profits. So I ended up taking a modest 33 handle win on this with a 20 handle stop loss. That gave us around $600. Here was one that we got a 10 handle win on, but the risk to reward was horrible. As you can see, there was not a single fair value gap in this price leg until we got up to here. And that is where we had to take our trade. So obviously, I'm not going to let this trade go down 60 handles. I basically just made a tight stop loss, and then I was targeting this low resistance liquidity. I was expecting price to just run past these, and then I sold the trade right away. And a good thing that I did, ultimately we really didn't move higher, kind of just consolidated around here and then ended up selling off towards the end of day. You got to be smart when you're taking these trades. If your risk to reward is absolutely horrendous, don't take the trade. Just stay away from it completely. It's important to note that this model does not show up every day. So you have to be paying attention to see if it's actually presenting itself. Winning trades, however, almost always were triggered between 2:38 and 3:10 p.m. and they usually hit their targets within 15 to 40 minutes. There are a couple of things that I also noticed about the losing trades. When price was trending higher or lower with no obvious sweep of liquidity, it seemed I got a few more failed positives for my entries with the inversions, but they were still valid entries, so I included them in the data set. Also, some of the most explosive moves came following 230 almost exactly, combined with a liquidity sweep at a swing low or high. Those at times turned into 100-point movers. Those are really fun. Here is what I've learned from this experience personally. The market doesn't reward effort trying to catch a winning move. It rewards structure. It rewards following a clear process. This 3 p.m. reversal model has become one of the most reliable setups that I trade, and when I see it, it's a no-brainer. I take the trade. It's not because it's flashy, it's because it's predictable and repeatable. And I'm always building and backtesting new ideas and models like this one. Right now, I'm testing a pump and dump model off the open that's showing some early promise. If you want to learn the exact models I trade, including this one, or follow along as I build and test new ones, you can follow along and hang out with us at dtjacademy.com. Inside the academy, you're going to be getting a complete model breakdown, video lessons, rules, examples, and access to our private Discord community. You can also stay connected, ask questions, and learn with traders on the same mission. Come and join us. Learn the models, trade with discipline, and watch what happens when you stop guessing and start submitting to the process. Let's go.